From AAAFx, this is Chris taking a look at crude oil. Crude oil on Friday did pull back a bit. This is the WTI or the U.S. oil market, as CFD traders sometimes know it. We did pull back, but it looks like we're going to continue to pressure this zone here. So I'm going to put a rectangle here. And this rectangle for me represents what we need to get through to see a longer term bullish move. I do think we do this eventually, and I do think that every short-term pullback gets bought into. At this point, just above $75 seems to be the value point in the U.S. oil market. Brent, identical chart, as you would expect, basically, just kind of hanging around here. Trying to discern where we get free. I'd say somewhere around $83.50 to $84. That's the neighborhood where once we break through that, Brent's really going to take off. Both of these, and I am using a little bit of artistic license here, have formed an inverted head and shoulders. We retested the trend line. It basically says the same thing. It's not the ideal pattern for an inverted head and shoulders, but it is telling you the same thing. So with that being the case, if we can get above 84, I don't see anything that stops Brent from going to 87.5 and then eventually to like 91.5. Brent, WTI, both are going to see a lot of pressure to the upside due to the fact that central banks are expected to loosen monetary policy. Supply is dwindling. Those are two things that work in the favor of oil, not to mention the fact we still have a lot of tension in the Middle East, and that could drive oil prices higher as well.
AAAFx